Hey guys, good morning. Bill Soriano here from Pittsburgh, coming live in the group, my FRX Smart Money Trading Academy group. And guys, the one thing I want to mention is I don't know, I might not do any more live sessions here in the group. What I notice is that the images that I post in the group tend to get a lot of reach, but my live sessions, my live videos just don't get as much reach. So I don't know. I mean, I'm still going to post videos here in the group, but I'm probably just not going to do live Facebook videos. I'm probably just going to record them, upload them to YouTube because I want to build a YouTube channel there anyway, and then just link to them in the group here because it seems like going live is just not an effective strategy right now. But anyway, want to look at two trades from today here, AUDCAD and NZDCAD. So we can here for a second. I'm going to replay this even though you can see here at this point what's going on. But I just want to give you an idea of how these trades worked out here. Okay, so this is our 4-hour order block, right? We've determined that these are bearish on a higher time frame trend. Right, the daily, the 4-hour, and this is our 4-hour order block with that blue line being our point of interest. So let's just play this. We could see our point of interest gets hit. Then price immediately makes a move down. Okay. Now you can see here when this gets hit, the issue is that our choke is all the way down here at this wick. So we would need a break of structure all the way down there. Now, some people would see this little internal break of structure here as the choke that they could trade from, but I don't see it that way. Okay, right now, to me, this has to move all the way down here. So obviously, we'd like to see this move a little bit higher so that we can get a better entry, a quicker entry, I guess, not better, but quicker. So what happens is price moves back up and then boom, makes a big move down, right? Now, right? Now what happens right here is now you actually do get that break of structure to the downside, right? Now, some people might consider this the break of structure, but again, this really doesn't make a new high here. So now this is where I look at identifying this order block up here, right? We have a 15-minute order block. We have a nice engulfing candle after it. It leaves some imbalance, right? Not much. And then we also have a second confirmation here, right? We have a valid shift candle entry model, right? So that's a second confirmation for us. But where we would get into this trade is right at that wick of our order block there, okay? So, and then we're going to put our stop loss. Again, we pad our stop loss 1 times the ATR, okay? And our ATR is down here in the bottom of the screen. Let me just see if I can get rid of it. No, I don't want to mix it down. Our ATO is down, our ATR is down here. So you can see at the time that this gets broken, our ATR is about 9 pips. Okay, so if our stop loss would go at the wick here, which is 7, and we add 9 onto that, then we get about a 16 pip stop loss right to there. Okay, and that's important, as you're going to see. Okay, now let's play this forward. So now we need price to flag all the way back up to this area here so we can get into this trade. And as you can see, all throughout the day yesterday, it just flagged up there. There was no really impulsive moves up. It just kind of flagged up. And then boom, right there, right here, 4:30 this morning, 4:30 a.m. this morning, we would get in this trade. Now, keep in mind, we have a lot of news coming out today, right? What's the news look like here? What was the news? What time did it actually come out? 8:30 a.m., right? So 8:30 a.m. is when that news actually did come out. Okay, so we're in the trade here, right? And our stop loss is up here. So let's see what happens here. Okay, boom, look at that move down. Okay, so we get into the trade, right? We don't get close to getting stopped out. Okay, now remember, we're trying to get a 1 to 2 trade, 1 to 2 risk to reward. So this is marked up right now. If we have this at a 1 to 2, right? And we're out of the trade right here. We have this at a 1 to 2, we're out of the trade right here. Okay, now remember, there was news here. So right here, if we wanted to exit before the news, we could have gotten out and we would have almost been at our 1 to 2. Look what happens on the news. That news candle throws a wick all the way up close, all the way back to almost where we got in, but then price just continues down again, right? And goes through our take profit. Now, the question is, could we get a 1 to 3 on this? We don't know. Probably not. A 1 to 3 would be all the way down here. So we would almost got it, but probably at this point, price is going to move back up. But this was a winning trade, right? Price came up, it hit our, we got entered into this trade. We would have got entered into this trade right here, 4:30 a.m. this morning, and then we could have gotten out right before the news came out. Or we could have just stayed in and it would have hit our take profit. Either way, it's a winning trade for us. So this was a winning trade in AUDCAD, AUDCAD. Now we had a similar situation here in NZDCAD. So this is the NZDCAD trade here. And again, if we want to look at the replay on this one, and come back to here where price hits our point of interest, right? Now we're looking for the choke. Okay, so let's just stop this for a minute here. So right here, price comes down, but we don't get our choke. Now, when price moves up and it makes a new high, right? We get a body of a candle closing above that wick. That now makes this the choke right here. That red line right there is the choke. So right here, price comes down, right? And it breaks structure right there, giving us our change of character. The ATR over in the bottom left corner is 10 pips. Okay, so what does that tell us? That tells us that we could set our entry right at this order block here. See this blue candle, the last up candle before the down move? We have the same situation here like we had in AUDCAD. We get a nice engulfing candle after it. It doesn't leave much imbalance because this shift candle here also wicks up, but there's a little bit of imbalance up there. Okay, we get a second confirmation now with this shift candle. Okay, and then the FVG entry would be there. But anyway, we put our entry right at the wick of this blue candle here. That's the beginning of the order block. Okay, let's just see what happens here. Oh, okay, then our stop loss, right, has to go, right? There's the wick at stop loss about 8.4, but we have to add 10 pips onto that, right? Because we have to pad it with our average true range for the last 14 periods, right? So our stop loss goes up here. Let's see what happens in this one now. Again, price kind of flags back up. Really no impulsive moves, right? It's flagging back up all day. You get a little bit impulsive there, but just kind of flags back up. And then let's see where it hits. Right there. So right here, about 3:30 in the morning. So this was 3:30 in the morning during the London session. Price enters us into the trade at our sell limit right there. Okay, now let's see what happens from here. Okay, we get a lot of drawdown. Okay. A bigger move up gives us more drawdown than we would want, but because we pad our stop loss with 1 times that 14 period ATR, we don't get stopped out. Okay. Now, if we were to put our stop loss right at the wick here, right, or even at the wick +2, like some people do, we get stopped out. Okay. So the only way we're able to stay in this trade is if we pad the stop loss, right? Because the 14 period ATR was 10 pips. We added that on. And so that gave us plenty of room here to the upside. Okay. Now let's see what price does after that. Okay. So let's see. And then we're at the current time here. So right here, right before that news candle comes out, okay, you could have got out of this trade in profit. Okay. Now, if you just stick with it, you can see what happens on the news. The wick goes all the way back up, takes you back into drawdown, but then it continues down. Okay. So right now on this trade, if we're trying to get a 1 to 2, we got it. Right. So our 1 to 2 was right there. That's a winning trade. Okay. So it's a winning trade. You could have decided to get out before that news candle in profit. So it would be a winning trade. Or if you stuck around through the news, you would have gotten out at your take profit goal of 2R, or 2 times your risk. So this is why it's so important that you set these stop losses exact, right? Because even though you're risking the same dollar amount per trade, right? Doesn't matter if your stop loss is 10 pips away, 20 pips away, 30 pips away, you're still going to risk the same amount on that trade because you're just going to adjust your lot size, right? If you're risking 1% of your account, 2% of your account, you're going to adjust the lot size to allow for the pips that you're risking. But the key point is, and nobody teaches this, nobody drives this home, is that you always want, you're able to get out of your trades once you're up 2 times your risk, right? And you have to use pips to determine that, right? You're using pips to determine that. So if you're risking 10 pips on the trade, it's still 1% of your account. If you're risking 20 pips on the trade, it's still 1% of your account. If you're risking 30 pips on the trade, it's still 1% of your account, right? Still the same dollar amount. But in order to decide when to get out, you're going to get out at 2 times your risk. So if you're only risking 10, if the trade setup allows you to just risk 10, you can get out when you're up 20 with your 2% gain. If you're risking 20, you have to go to 40, right? If you're risking 30, you have to get all the way to 60. So in this case here, it's always better to take the trades where your stop loss is going to be 20 pips or less. Okay. But you have to pad that stop loss with 1 times the 14 period ATR. That's the average true range. And that's different for all pairs because all pairs move differently. So that's why you just can't pad your stop loss with a arbitrary amount, like 2 pips, 5 pips, 6 pips, right? Or you just can't put it slightly above the wick or slightly below the wick. You have to use something that's market driven. And that's the ATR, the average true range of that particular currency you're trading. So when you use the 14 period ATR, it's going to take the average range of the last 14 candles. Okay. And that's how you're going to determine where to set your stop loss. And that's what's going to keep you in trades like this so that you get your 1 to 2. Otherwise, you know, if you're just setting your stop loss right here, a little bit above the wick, you're stopped out of this trade, you lose. Right? So that's why it's so important to use the ATR. Right? So this was another good trade. So that's two good trades this morning, two winning trades this morning. You could have gotten out of both of these trades in profit before the news hit, or you could have stayed in them and got out at 2R times your risk. Okay. So again, guys, I think I'm just going to start posting these videos on my YouTube channel and then dropping the link to them here in the group, because it just doesn't make any sense for me to go live, because people just don't seem to be watching. So if you think that's incorrect, you can drop a comment down below and let me know. But either way, you're going to have access to these videos. It just seems like images are reaching more people than my videos do. So Bill Soriano from Pittsburgh, guys. If you need to get your 9-part Smart Money Concepts video series, which is going to give you the background that you need in order to trade this strategy that I teach here for free in my group, FRX Smart Money Trading Academy. It's Smart Money Concepts, right? We're using the higher time frame trend, right, to determine which way to take the trade. We're using our 4-hour order block, our 4-hour point of interest. Once that gets hit, we drop down to the 15-minute and we wait for our lower time frame flip. We wait for that change of character or that choke, so that we can determine our order block that caused that break of structure on the 15-minute. And that's where we can set our limit orders, right? So that way you're not always watching the charts. You're able to set your limit orders if you have to go to sleep or you have to go to work. And if your price gets hit, if your limit gets hit, then you'll get into the trade and it'll be good. So, but again, this is why I teach people. A lot of people are teaching you just to put your stop loss above this wick. You can't do it. I'm doing a test right now, and I've already determined that 2 of the wins that I had, including this one here, would have been losses had I just used a normal stop loss, which is, you know, slightly above or below the wick. Okay, they would have been losses. But because I use 1 times, because I pad it with 1 times the 14-period ATR, we don't get stopped out of these trades. Now, the downside of that is we have to go further to get out, right? Because we're adding pips onto our stop loss. But the upside is we stay in the trade. Okay. So if you need that 9-part video series, let me know. I'll send you a link to register. If you're ready to join our community, get access to everything, try it out for 7 days, that's great as well. Let me know. I'll send you a link. Otherwise, Bill Soriano from Pittsburgh. Have a great day.